Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. Sunday the 20th of March and the sun is shining, which is, to be fair, a rarity in this country. What's it like there, Kev? Raining today in Cairo?
No, it's been nice and sunny today. I was out getting some heat. It's not very warm still. It's only about 17 or 18 degrees still, so still very cool. The weather's been nice. Nice-ish anyway. And my wife got a new car this week, so everybody's happy and smiling.
Nice. How is it? It's one of these, you bought a Chinese, is it Geely or something like that? Is it Geely?
A Geely Okavango is what it's called. And,
tell you what, mate, you've got a class choice in motor there, haven't you?
You can put about 30 people in it. It's 7-seater come 17-seater. I think there was 9 people in it last night when Naveen was taking them around. I haven't actually driven it yet, but listen, the badge on the front makes no difference to me. I think it's a sound car. It's one of these hybrid things, electric and petrol. So we're doing our bit for the environment, hopefully. Chinese. Yeah, so other than that, it's been an interesting week again. I think the markets are sort of settling down a bit, which is good. Coal price seems to be going bloody crazy. What's happening there?
Gone absolutely ballistic, isn't it? High vol A, high vol B through. Was it 520 or 550 or something crazy this morning? I saw on
465 for high vol B, high vol A at 520. I'm not sure which. And then even the old coking coal or coke, spot price of that's 650. Between anything from 620 to 650. It's crazy. There just is a fundamental structural problem with coal. There's not enough of it. Do you know anybody who knows anything about that?
Wouldn't have a clue.
I haven't a clue either. So that's the end of the Sunday Roast. It's been a pleasure meeting you.
Speak up if you know anything.
Hi, guys.
Oh, who's that?
Hello.
Who's that?
Carl.
Yes, hi, guys. Into the conversation only halfway through there. But anyway, good to hear you got a new car there.
Yeah. I saw you smile when it said Chinese, so that's okay.
Well,
compared to the previous car, believe you me, it's a major improvement.
You've gone from a French car to a Chinese car. I mean,
from a 2006 Renault Megane, which is still my pride and joy outside. Actually, I still have this one to run around in. To a brand new car of any description is a wonderful upgrade.
Oh, congratulations! Yeah, and to your point, the coke price. I know you mentioned the spot price, but the coke price is a negotiated settlement between the Australians and the Chinese. And I don't know if you noticed on the news this week, but the Australians indicated that they'll be pushing up the coke price by another $50 in the next negotiation. So obviously there's huge upward pressure on the entire carbon energy complex. There's lots of coal in the world. There's lots of coke and coal in the world, but there's been this structural shift away from coal over the last decade or more. And that's difficult to turn around at the moment. I mean, America used to produce, these numbers off the top of my head, but America used to produce about 1.1 billion tons of coal, and it's now sitting around 600 million. That's 500 million tons of coal out of the market because of their, search for energy purity. And recent events in the world have kind of made people think a little bit about energy security rather than just what the molecules are, but how do we make sure that we have those molecules?
Do you think that you had all the COP recently where there was a massive drive and this get rid of thermal coal, it's the poison, the CO2. Do you think there's still going to be a massive reliance and dependence on thermal coal and met coal going forward for the next 10, 15, 20 years?
I think one has to be careful to separate the met coal and the thermal coal because although on the supply side, I agree with you, mostly met coal and thermal coal sit in the same resource.
Yeah.
On the demand side, met coal is irreplaceable. You need met coal for steel, you need met coal for chrome, you need met coal for alloyed metals. You even need met coal for manganese, which goes into batteries of your electric vehicles. So met coal, the demand for met coal is going to increase from where it is today. If you want to build more wind farms, you need more steel. If you need steel, you need met coal. Thermal coal is a bit more difficult because a lot of Europe has made the decision to move away from thermal coal, and that's going to be a difficult decision to unwind, even though I understand in recent weeks people have been thinking, well, what about including Germany, what about our energy security? We can't rely on external people only for sources of energy. That may become a thermal issue, or it may become a nuclear issue. I think the way I'm reading it at the moment, Europe is moving towards becoming a little bit more reliant on nuclear. That's not a bad thing, actually, for the likes of us, because what we don't want is thousands of coal mines to open up around the world. Because
it's funny you mentioned that, because Japan used to be pretty much all nuclear power stations, and since Fukushima happened, I think it was in 2010 or 11, they've actually shut down every single one of the nuclear plants and are now fired up the thermal coal power plants, and they're importing a massive amount of that from Australia. So it's bizarre that they've gone from this complete shift from nuclear power to thermal coal powered stations to supply their electricity, which, the Japanese, they're extremely at the forefront of technology. It's a massive step backwards in terms of forward thinking, but the Australians are providing a massive amount for them. And I guess with the Ukraine thing going on now, Chernobyl being run by potentially the Russians, you've had people firing into another plant, and there's probably 5 or 6 large nuclear plants in Ukraine. All you need is one more meltdown, and then that'll sign the death knell of nuclear power plants, surely.
Yeah, I agree with you. Obviously, that's, safety and fear dictates lots of policy in the world today. I'm not an expert on nuclear, as you can tell. I'm not an expert on many things, but I'm certainly not an expert on nuclear. I can just see what I'm reading is that because of the French dominance in terms of the nuclear technologies and the French dominance of Europe, Europe seems to be thinking that nuclear is the way that it can become more energy independent. I mean, as an example, in Portugal, there's 2 big thermal coal plants, and both of them have now been shut down because it's thermal. And then Portugal signed a deal with Morocco to import power, and Morocco is building a thermal coal plant to supply the power. So there's not always massive logic in the way things work, but in the end, you need like a portfolio of different energy types, some renewables, obviously some natural gas. Thermal may or may not have a future in Europe, but certainly I think nuclear will increase, and some of these renewables might decrease as a percentage just because people don't want reliance on foreign countries for their power.
Thermal coal in the likes of the subcontinent, India, and also the whole of China, it's inevitable. They have to carry on. They have no choice. They cannot increase the standard of living of their people and cover the expectations of electricity without thermal power or power stations. It's just not possible.
Maybe 10 or 12 years ago, when I was an analyst looking at the space, China did about 3 billion tons of coal a year. China now produces 4 billion tons of coal a year. So in the time that America shut down 600 million tons, China's added 1 billion tons of coal production a year. So cheap power, it's all very well for the West to tell developing countries like Zimbabwe and South Africa that you need to do wind and solar, because obviously it's cleaner and better. I understand that. But that comes at a cost of 27 or 26 cents per kilowatt hour, when thermal coal, when South Africa was developing, so the old Bayside and Hillside smelters in South Africa that used to take all the excess power from Eskom would buy their power at 2 cents a kilowatt hour because it was cheap thermal coal. So you do, I agree with you, you do need developing countries. Certainly the cheapest power in the world is coal, and developing countries will not shoot themselves in the foot in order to produce clean energy when everyone else in the West developed on the back of cheap energy.
Well, let's move back to the metallurgical coal. As you said, in terms of the need for metallurgical coal, as you rightly said, there is lots of coal in the world, okay? But when I was saying there was a structural deficit, there's actually a structural deficit of supply of this metallurgical coal, as in the people supplying it are not there, mainly because the thermal power or the thermal coal producers who produced a certain amount of thermal, a certain amount of metallurgical, are now closing down because it wasn't profitable for many years. So we're in this situation.
And for ESG reasons. So some larger companies like BHP are looking to move out of the space totally because every company has to look at itself and where it fits within an index. And if BHP wants to be in an ESG index, it's got to move coal. So people are making decisions based not only on profitability, because actually thermal coal is quite profitable at the moment, but based on where they want to position their companies going forward in the new world. And you're right. So we've seen a large scale reduction in thermal coal production. And on the back of that, on met coal production as well.
So the good news is in the next literally couple of weeks, you're going to be digging some of this metallurgical coal out of the ground. So tell us a bit more about that.
Well, yes, I mean, that's correct. So the project, I think we put a tweet out today to say that we've looked at a new name for the project down in Zimbabwe. It's called Muchesu Coal. Muchesu Coal is the local village where the mine is. And it's a hive of activity at the moment. I think I explained last time, we're busy preparing all the civil engineering for the surface infrastructure. The wash plant is being constructed in South Africa. The laboratory is being constructed in South Africa, ready to be delivered in the next quarter. And the overburden on the mine is being removed as we speak. And we'll start mining the coal in the next 2 weeks.
That coal comes out, what are you going to do?
Initially, we're going to stockpile the coal and wait for the wash plant to come online. Once the wash plant comes online, we'll wash that coal. And we've been having some very interesting discussions in the last few weeks on both the coking coal side and the coke side. So not to come back to the Ukraine situation, but in the last few weeks, we've had 2 inquiries from Europe even for coke. And that's for coke, not coking coal. And we've had some very, very encouraging discussions in South Africa about supply of washed coking coal into South Africa. The price in South Africa is obviously increasing in line with, although it's a lower price, but it's increasing in line with world prices. And South Africa imports a lot of coking coal from Australia and even the USA. And so they're looking to substitute some of that coking coal with supply from Zimbabwe. So we're in discussions with some trading houses in South Africa about the supply of coking coal, which previously might have been marginal for us to transport coking coal all the way to South Africa and sell it. But now with the recent price increases, becomes increasingly profitable for us to do.
Once the coal starts coming out and we get washed quantities, then effectively we should be selling that coal to somebody in South Africa. Yes. And you also said before was that they're also interested in some sort of offtake agreement as well, I think, for the
so
coke.
They are very interested in coke, obviously, because South Africa is a huge consumer of coke. It used to be self-sufficient in coke. It no longer is. And also South Africa has a nice range of end uses of coke. It's not only the steel industry, it's got the chrome industry, it's got the manganese industry, it's got the alloys industry, all of which require different purities, different impurities. So steel, your FOS levels can be higher. If you're in chrome, your FOS levels have to be very, very strict within a spec. So depending on where we are in our deposit and as our FOS levels move around, our end coke product will have different levels of impurities. That's just the way it works with the resource. And luckily for us, there's a range of uses in South Africa for that coal. So the people in South Africa we're talking to at the moment are very interested in the coke product. And even at this point, we're in discussions with them about investing at the project level in order for them to secure an offtake from us. And just to be clear, the offtake will be done at market rates. There's not going to be a fixed price offtake. There'll be a margin in it for them, of course. But the offtake, as the price increases, the offtake price will increase. And as the price decreases, the offtake price will decrease as well.
They're quite interested in part funding the big coking plant.
The big one, yes, the expansion.
Or the big coking battery.
Correct.
Very good.
And they actually already are buying coke from the Chinese producers, in Zimbabwe, and they're transporting it already to South Africa. So what's encouraging for them is that they already have logistics under control.
So we can see that come wash plant time, you're going to have reasonable revenues coming in terms of the amount. What sort of amounts of coal do you think can be done on a monthly basis once the wash plant is up and running?
Everything's been designed for about 255,000 tons of coal a year. And then obviously that washes to about 150,000 tons of metallurgical coal. So we've scaled the mine up in order to produce the 150,000 tons of coke that we spoke about. And so our surface infrastructure can handle 255,000 tons of coking coal. Obviously, as soon as we have the coke batteries up and running, we'll convert as much of that to coke as possible, because the coke price in South Africa is extremely healthy and the transport cost is the same whether you're transporting coke or coking coal. So you'd want to transport as high value a product as possible.
So the margin will be much higher on the coke, but ultimately the metallurgical coal can produce quite significant revenues for the company in the meantime.
Yeah. And obviously if the price remains this high or starts increasing, then that margin that flows straight through to the bottom line for us.
Yeah, and we saw photographs of different things that in the report that we put out, which was, some of that was taking the tops off the coal so you can get to it.
Yeah.
Other bit was some house building for
the local community. We're moving villages off places we're mining, so we are obliged to build new houses. That's going to be a process that's ongoing for the next few months. As and when we access new areas, we'll make sure that we have houses for the villagers. You saw that we're laying water pipes. That's to build the infrastructure into the wash plants. Soon the generators will start arriving on site. All the pads are going to get built for the actual civil engineering and the cut and fill for the actual where the wash plant and the crushing circuit will be. And then lastly, we'll have some settling ponds for the water that comes off the wash plant.
So is this in Michesu? Is this the Michesu area? Is that referred to?
Yes, the local village.
I mean, that village, you must be bringing a really good community feel to that village as well, right? I mean, can you tell us about what it means for the community there?
It's an area without much economic development, and it's an area that Zimbabwe's been trying to develop for years. They've got this big agricultural project, maybe an hour drive from us, where they're trying to build huge. They're trying to lay infrastructure for agriculture. But really, this is going to be the first economic development anywhere near this place almost ever. And so we've been very well received. And also, we haven't shirked our responsibilities in terms of moving people. We haven't, the accommodation we're building accommodation for people that we're moving. It's going to be good quality accommodation. And then we will, of course, hire people from the local community for roles that they can do. So often that'll be security and banksmen. If a person from a local village can't drive an excavator, we can't hire them to drive the excavator, but we will make sure that we empower the local village through employment as well.
So you're bringing that kind of like that community, and also, as you say, jobs and hiring local people and giving them, generating a kind of, that wealth within there, so that they're going to be loyal to your company, etc.
Yes.
It's a good way of doing things. And as I say, I mean, what cost to you does that come to bring that in? Obviously, there may be some training involved. There may be the rehousing or rehoming of some individuals. Do you want to talk us through how that kind of works?
In terms of the rehousing, there's just a cost to build new houses for people. So what we've done is you do a process called human terrain mapping, where you map out who lives where. You discuss that with the local village, and you agree a plan as to who will get relocated. And then we discuss that with the planning officer at the local county. That process has all happened. And then I said, we'll start the process of building houses and moving people. It won't be all at once. It'll be piecemeal. But obviously, we have to move someone before we take their house and we mine coal underneath it. In terms of training people and empowering people from the local village to work on the mine, that's a bit of a longer process, because it's an ongoing process. We will have, for some of the lower skilled jobs, they'll be suitable for that without much training. To upskill people in the local village and try and pick managerial roles for them is a process that might take a longer period than we can plan at the moment. So that'll be an ongoing process for us.
If we look at Contango as a whole, we're basically looking at the coal in Zimbabwe. We're going to go through three steps actually. One, we're going to be selling some washed metallurgical coal. Two, we're going to be creating a small coking battery, which will then turn into some of the coal into coke. And then we're going to have a third stage and maybe a fourth and a fifth stage of 150,000 module of coking batteries. So at that point, based on the conversations you've had in South Africa and your understanding, what sort of margin are you looking at in terms of the current prices in South Africa for the coke?
To sell coke in South Africa, on the margin with us delivered from the mine, cooked coal, mined coal, and delivered into South Africa, our margin will be $200 a ton of coke.
Okay, so that's all the costs out of it. You will be EBITDA $200 a ton.
Yeah, at today's prices. If the price increases, obviously that goes up, and if the price falls, then that goes down. But in today's pricing, and just so we're clear, South African pricing is about $200 lower than the Chinese pricing. So there's room for South African price to increase in order for us to reach some equality with the internationally imported price.
There is an issue as you increase production that you could send it overseas anyway, even if it costs you an extra $100 a ton, then effectively it would still make sense.
Absolutely. And we're already discussing with one of the ports in the north of Mozambique. We're having discussions around what would the entitlement that we could get at that port in planning for the future.
Let's shift gears slightly, because if you get a chance, all the people who are listening, if you get a chance, have a read of what we put out this week, okay? Because there's two parts to Contango, and the first part is most definitely, and the biggest part is going to be the coke or the metallurgical coal, but we've also got a very large gold situation going on here as well. So do you want to tell us a bit about that, Carl?
Yes, I'm in Mali. In 3 weeks' time, I'm in Mali. We're going to look at the results that have come from the recent IP program that we've had in country. I'm also meeting some potential interested parties while I'm there, and we're going to have discussions around the future of the Carroll and Kevin project. I think I explained to you last time on the call that it's an extremely prospective exploration zone. We've seen renewed interest across the whole commodities sphere. So obviously not just us, but most commodity companies now have seen large interest from well-capitalized larger companies, and so we are still continuing those discussions.
What is the plan in terms of JORC reports and progressing, or is it just a case of doing more groundwork and drilling there?
The next phase for us will be drilling, unless we can find some sort of a strategic relationship that will do the drilling for us. And that drilling will then enable us to put out a JORC resource and kind of claim the full 1.8 million ounces that we think is there. And if we have 1.8 million ounces, if we prove the 1.8 million ounces, then obviously the valuation just of that would be tens of millions of dollars. And
then the current gold prices, of course, that have obviously bust through 2,000. It's dropped back a bit. It's now's a good time, right?
Absolutely, yeah. Fantastic time for gold.
Again, if we look at Contango, you're going to have a gold asset, which hopefully is going to be taken on by a bigger partner who's going to invest in it, and you're going to benefit from that. Obviously, you thought it was basically a 300,000 ounce deposit, and it seems like it's going to be significantly more than that, going up to 1 million, maybe even 2 million ounces of gold. And on top of that, in the next couple of weeks, we're going to be digging some metallurgical coal out of the ground. And within the next quarter, we hopefully will have the wash plant available, and then you can start to sell that washed coal into South Africa.
Yes.
And the coke itself into South Africa.
For months, we were talking to off-takers, and we just had basically an exploration piece of land. Now that people can see activity, it's even been in the local newspapers in Zimbabwe. They can see a mine's going to get built. They can see production's coming. Then off-takers are taking us much more seriously, as they should. We will be producing coal in the next few weeks. We'll be washing it in the next few months, and we'll have coal ready to sell into a market that currently importing coal from way further away. So we're a very serious player in terms of these traders in South Africa that are looking to bring in coal to satisfy the demand there.
So before we sign off, Carl, we've got to ask the question. We always do it. It's a little bit predictable, a little bit boring, but we do it anyway. What is Carl Esprey's ultimate Sunday roast?
The Sunday roast I'm looking forward to the most is in 2 weeks' time in Lubu, overlooking an excavator, digging coal out with a barbecue going, potentially even cooking food with our own coal.
Wow.
It might not be a roast because it's a barbecue, but it'll be boerewors sausages and some steaks. I'll make sure I'll take a photo of it and send it to you as well to make sure. And then drinking some good South African red wine.
It won't It won't be a barbecue. It'll be a braai.
Of course, yeah. Sorry, I was trying to translate.
So you just said a nice red, like a South African red. I mean, I've spent many a time in South Africa. What would it be with you? Something like a Pinotage or something like that?
Yeah, or the Villefonte.
Yeah, nice.
Yeah,
good choice. You show some of your wines earlier on in the background, and you've got a very impressive. I don't think I've seen many. I know it goes up in the sizes. You've got your normal bottle, you've got your Magnum, I think, which is a double. Then you've got like things like the Jeroboam and the Methuselah and yet Nebuchadnezzar. I mean, you've got a serious collection there in the background. What's the biggest bottle you've got?
I don't know the names. I've got a few 6-liter bottles. Although I never know when to drink them because I can't drink a 6-liter bottle of wine myself.
Phil probably could if you let him have a go.
I actually, we've done this before, and the 6-liter is known as a Methuselah. Okay, and that's equivalent to 8 standard 750ml bottles. So you're right. I've done 4 bottles in a night before. So with a mate, I reckon between us, if I come and visit you, we could probably, on a good long day with some good food, we could probably, and some good cheeses, we could get through that.
I look forward to it.
Yeah, you won't be standing, but you could get through it. And I will watch and laugh at you all.
Carl Esprey, CEO of Contango Holdings, thanks very much for your time.
Thank you, guys.
So that was a good chat, wasn't it? It was good to see Carl again. I've seen him for probably 8 weeks now or 6 weeks. So what are your thoughts?
You have some big bottles of wine.
He's I think we're going to get on well. I think that's all I can say. And I'm looking forward to smashing that Methuselah, that 6-liter bad boy.
He's absolutely huge, and he's got about 4 of them sitting there. Yeah, Contango Holdings. Yeah, great roadmap now. It seems like there's a clear path. There's going to be coal coming out the ground very shortly. Then the wash plant's going to go in place, and at the same time, they're going to be planning to put the coking battery, the small one, in place. Should be some revenue coming from selling the metallurgical coal once it's able to be washed, and then ultimately financing of this. Big battery, coking battery, 150,000 tons a year, which will really produce and make this company 30 to 40 million EBITDA per year, and that's even without the gold, because I think the gold actually makes up a huge part, if not all, of the current market cap. So, yeah, I think it's got a big future. Yeah, ticked up a bit over the last few days, 8p paid again. And I can see double figures pretty shortly. Just have to see how it all plays out, obviously, but it all looks very promising, I have to say. What do you think, Phil?
Yeah, I mean, I'm looking at the market cap now. I think it's about 25, just around the 25 million mark. I'm not going to draw parallels to Ben because it's a lot more early stage than Ben. But if we do look at the valuation of Ben and what that's doing with its off takes, even if it just does, a fraction of what Ben's done in terms of re-rate, it could be very impressive, couldn't it? We're still very cheap. It's still very cheap for the size of the Lubu project itself. And also, as you say, with the Mali assets, the gold assets there, if they can prove up some more of that JORC and actually book those reserves on there, then yeah, it's a great investment. It's not a one-trick pony. And I think our friend Colin Bird always said, don't buy into stocks that have just got one underlying project. It's got to be more than one, right? And that certainly fits the bill here.
And I mean, if you look at it from a purely, again, not direct comparison at all, but Ben's Creek listed at £35 million.
Yeah.
And it's still only £25 million now for Contango. So, and we've got the gold thrown in on the side. Contango has much more coal than Ben's Creek does. It's obviously not in as safe as a jurisdiction as Ben's Creek is, and it's also not going to be directly production straight away, but it's not far away.
Yeah.
It's probably only a quarter before they start receiving some revenue from the metallurgical coal. But at the same time, they're not going to get the margins that they're going to get in the US because it's seen as a different type of coal. But, you cannot sniff at margins of a couple of $100 per ton, which is what Carl was talking about. So, yeah, I think if you like, a mini Ben's Creek is not a million miles, but it's not a direct comparison, and we must make that point. It's not.
Yeah, exactly. Yeah, I'm just looking at the level 2 now. Actually, I've got it on my screen, and it looks really nice. It looks like it's trading in a different fashion. Like the buy volume has gone very high. The sales, there was always quite a big spread on it, but the spread has really narrowed. So it's like 8p to buy. There's some sales just gone through around the 7.9 mark. So it's quite a tight spread now, which I really like. It just feels very different now that the trading action, if you look at level 2, looks like it's finally changed. And I think it's very difficult to buy. If I remember rightly, it is quite difficult to buy. I think that there's been a lot of market best and a lot of NT type trades going on today. I mean, I know that's indicative of a lot of small cap, sort of highly illiquid stocks, but it does feel like these are quite tightly held now. There's a lot of kind of longer term holders buying in, a bit like Ben.
We did the report, and that was put out this week. And I mean, those figures were fair value. I think it was a 15 to 18p now. And I think, within sort of 12 months, and that was actually before we heard the news of what Carl's got, you're looking at anything from 30 to 50p. So if you want a long-term investment and you missed out on Ben's Creek, and actually we must say Ben's Creek still got a long way to go, by the way, but that's neither here nor there. But if you want to be in at the basement for a long-term coal investment, and as we say, coal was the pariah a year ago, and now it's the hero because of all these situations that have arisen. But we need steel, don't we? Ultimately, we need all these things to make these things. So
it still feels like it's right at those. Look at the cap, forget the share price. It's a 24.8 sub 25 million cap right now, and as you say, Ben was around the 35 mil mark when it was 35 mil valuation on IPO. It's cheap. So let's move on to Ben then. And what a week we've had. We had on Friday 99 pence. I said it was going to do a quid. I was as close as you can get. I got to 99. It will hopefully bust through next week. There's no rush. It's patience. It's finished the week at an all-time high. What do you think?
Yeah, I mean, just keeps on giving, doesn't it? It's
phenomenal stock.
It's phenomenal stock, but when you do the maths and you actually look at what the EBITDA will be on this company, at £1, it is intrinsically undervalued. Now, everybody's going to be screaming, how can you say that when it's done 9 bags? But this stock came to market very, very cheap, and they priced it in the right way. Yeah, because basically everybody who got in at the start had the opportunity. And you look at the chart, it's had one pullback, and it sat around certain prices at certain levels for periods of time. But basically, I think it hit the 80s and then pulled back to the 60s. That's the only pullback it's had. I don't see it's going to have another pullback until it gets way over £1 again. Could be wrong, but which wouldn't be new. But ultimately, you look at the fundamentals, the EBITDA that's going to be created from, roughly speaking, at some point in the next few months, this company is going to be producing the equivalent of 1 billion tons of coal a year, with current margins well in excess of $200, but even using $200, we use $200 and we do 1 billion. This is $200 million of EBITDA per annum. You know, even if you use a PE of 5, you get $1 billion company. You use a PE of 7, you get £1 billion company. So take your pick, okay? But £1 billion company is going to value Ben's Creek around £2.75. So is there any movement left in this stock? Yeah, for sure. Maybe not the multiples that we've talked about in Contango, but you're going to get dividends. You're going to get all sorts of other things possible as well within this as well. So, yeah, I mean, Ben's just been the gift that's kept on giving, hasn't it? So
it's been. I was trying to think of other stocks I've been in over the last 15 years that have done similar things. There's one that springs to mind. XI Energy, XCL was the ticker. It was a North Sea oiler, and that did absolutely amazingly in a similar kind of, it was a really steady rise. Ironically, they ended up folding and doing nothing from then on. But that's not. I'm not drawing a parallel. It's just the share trading, the way it traded. And the thing with Ben is, it's just literally, it's not spiked and dropped. It's risen, consolidated, risen. Look at the graph. Bring up the graph now. We've looked at it, haven't we? The actual, the chart for it. Have you seen a smoother, just more beautiful chart than that? I mean, I'm not a chartist, but
the only comparison I can give you, and it's actually a very negative one also, is chill.com last year.
Yeah. Similar to Chill. But what about the decline on Chill?
Yeah.
Oh, you mean you invert you mean flip the other way around?
We'll talk about that later, because the Chill one goes up. And then it's a perfect mountain, actually, to be honest with you. It's a perfect mountain. And now I'm in at the base camp again, so we will see what happens.
Yeah. It's been phenomenal. It's been, and as you say, it doesn't feel like it's going to, I mean, anything can happen. We just don't know. But the point is it feels strong. It feels like it's consolidated. And once that railroad is trucking those tons out with the washed coal and increasing the amount, getting the second high wall miner on site, and then obviously getting the second shift for the first one, then the second one will come in, it'll do a first shift, then they'll bring the second shift on, and production output is just going to go through the roof. So yeah, just the start of it really, the start of the beginning, as they say. So moving on, what else has been good this week? We've had some good news on, one that springs to mind was Besant Resources. Do you want to talk about that? That's the Mankayan project.
Yeah, I mean, Best Resources basically, I think they got a 25-year extension or a 25-year mining license, didn't they? In the Philippines, I think it was. So yeah, extremely good news. Share price was up 25%, I think, and then a seller came in and bang, 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 bang. Still up, I think, on by the time the day's finished, but yeah, there's obviously a seller there, and the seller's hopefully exited stage right, because it's massively undervalued. I mean, I don't what is the market cap on Percent? It's not very much at all for all the different things that they're involved in.
The market cap on Bazant is 9.3 million, so it's sub 10 million cap. Now, one thing that you look at that, and it's related to the 25-year term that comes into effect from the 12th of, obviously it's backdated to the 12th of November 2021. But the words are that the Mankind project is a potentially world-class copper gold porphyry. It's a porphyry. It's a typical one of Colin Bird's porphyries. And at a time when the Philippines is looking to further develop its mining industry. So it's a massive thing for them. I think there was one comment on that RNS that really jumped out at me. The MPSA renewal for 25 years is seen by the company as a catalyst for the development of the Mankind project, which is potentially world-class copper gold porphyry. So yeah, it's phenomenal.
And they've got basically 37.5% of that project.
27.5% is
27.5%.
27.5% interest. Yeah, I mean, there's a lot of work that's going to be commenced, and there's feasibility study processes, engaged internationally recognized firms there. So very interesting, actually. I think it's a very interesting stock. And as you say, like, that's just one element of it. It's the typical Bird. He's got the Mankind. He's got other projects down in individual mines as well, and he's also obviously got the Cyprus element of things, which is
the CMRS part of it is worth the market cap. Yeah. I mean, truly, and how they should benefit from that is probably worth the market cap at least, and that's only truly plus the extension now to what is it, Cortina Patra or Coconut Patra. So that's 1.5 kilometers of probably a gold copper strike that is probably going to extend that open pit all that way, which is just phenomenal amount of rocks or dirt, as the geologist says. You know, it's going to be a huge amount.
And he's also got the Hope and Gora project, doesn't he, in Namibia, which we talked about. Remember, we did our Colin Bird special. Yeah. He said the potential when he saw that. He said his jaw dropped, didn't he, at just how good a prospect it was, really.
Yeah,
I think the market's going to wake up soon to these things.
Moving on to CMRS, yes, huge amounts of news coming out. We've got CMRS has got obviously the joint venture to be concluded with Jubilee, which seems not inevitable, but it seems extremely likely. As they're doing huge amounts of work, literally millions of dollars of work to get to the point of knowing what plant to design for Truly. And not only Truly, actually, because there's also stuff coming from one of the other plants. The name escapes me, but one of the other things that's quite close to Truly that they're hoping to ship some stuff in as well, which is high-grade gold, I think, and copper.
Is that Anglicides?
Yeah, Anglicides. There you go. Me and names don't go very well, but yeah. So CMRS has been ticking up. I think it was about 16p by the close today, on Friday, and it's still massively undervalued. I think it's like about 10 million as well, or thereabouts, and I think should be worth considerably more.
Yeah. Extract Resources, while we're on the Bird theme, let's talk about Extract. That's had a nice little tick up, hasn't it?
Yeah, back up over 6p. I think it was 6.2 or whatever. I mean, there's nothing really new to say about this other than the fact that he has the value that is in that stock is already there from the gold that they're receiving every quarter, and about to be doubled or trebled, I think, in terms of the amount that they will get. And then you've got like the elephant in the room, which is the huge project in Australia. It's like, how is it not worth more even now, just on people thinking something's going to happen? Because in the next 8 weeks, something's going to happen. Like, it's going to happen. So it's about, Colin Bird getting onto the AA guys, and it's going to happen. They're either going to decide they want to buy it or they're not. And if they're not, then Colin's going to, stick the sign up to say we're for sale and we're starting to mine. So big opportunity there. And I think, when
I think
people
one thing that's starting to sort of like, get embedded into people's minds now, and people are maybe starting to wake up to it, is that, and we talked about this with Paul Johnson this week, and also Colin Bird's referenced it, is that these large scale, majors, the Rio Tintos, the Glencores of this world, do not have an exploration department anymore. They are reliant on these small nano cap junior explorers to discover things like world-class porphyries, world-class copper districts, world-class gold districts, to then bring them in as a great case in point. Conroy Gold have got a 65-kilometer gold district on their hands, Clontibret and Clay Lake, and they've got a great earning JV with a Fortune 500 company in the name of Demir Export, owned by the Cook family. They are probably Turkey's wealthiest family, and the value there. I mean, we saw a good trading. I think it was 21 pence a couple of sessions ago, like on Wednesday or even Tuesday, and it finished the day at around 34 pence. So why? Well, there's two reasons why. Well, one reason why is because we spoke to Professor Conroy in the week, didn't we? And we put out a podcast, and he was indignant. He was livid with the way the market was valuing his company. I've never seen him talk as passionately about it. And I'm convinced that people starting to see the value in it.
Yeah, I mean, if you remember when we got on the podcast, he was ranting at us initially. And he said, "Oh, I must calm down because we're going to do the podcast." And I said to him, "Stick a whiskey in that coffee, Professor, and keep that anger going, because we need to portray this to the market to show them how ridiculous your share price is."
Ridiculous.
And it's ridiculous. And it still is ridiculous. It still is. I mean, it's like, and if you then go on and listen to that 7-minute thing from Paul Johnson, who's a 5% TR1 holder in CGNR himself, he compares it completely to Greatland Gold, GGP, only it could be bigger. Okay?
I mean, he was pretty firm in the fact that he made a reference to, obviously, that he was investing in Greatland Gold at like 0.15 average. He had a lot of shares in that company, and he sold out at 2.5. And if he'd have held them all, they would have been worth £38 million. And he's not going to make that same mistake in Conroy, I don't think. I think he's learned from that.
No, I don't think he is. And I mean, I think really this is, if you want to have a gold prospect in your portfolio that has the potential to change your financial life, then I really do think that Conroy Gold is one of those. I mean, there's nothing else to line up. Basically, we're in a situation right now where they have the joint venture sorted out. They're waiting for one piece of paper from the UK something or other, and
Crown.
The Crown to transfer across. As soon as that's transferred across, they'll get paid €1 million. Demir's already said this is what the drilling program is going to be from April, which, by the way, is less than 4 weeks. And it's 3,000 meters initially, should be around 10,000 meters in the next 12 months. And that's going to prime up Clontibret to probably 2, 3, 4 million ounces of gold. We don't know for sure. And then you've got Clay Lake, which is actually in Northern Ireland. Again, they think this is 2, 3, 4, 5 million ounces of gold. Well, I don't know. I think Greatland is currently at 4 point something million ounces of gold. And these guys could be at that level inside the next 18 to 24 months. So ask yourself, Greatland Gold valued at, what is it today? 600 million?
Yeah, it obviously got up to over $1 billion at one point.
It was over $1 billion before it did its joint venture. But say 600 million. And
exactly,
what's
600 million today?
What's Conroy's market cap today?
13 million.
13 million pounds. So you do the maths, okay? Simple as that. I've done the maths.
Even if you just took half of the value of GGP, right,
No,
300 million.
let's say it does 20% of it, right? That's 120 million, right? Yeah. That is roughly 10 times what the price is now. So the price £3.30,
yeah,
okay, or £3.40, right? Yeah. So, I understand why Professor Conroy is so annoyed, because he basically said to us off camera, someone might come in with a £1.50 offer, low ball offer. He said a low ball offer at £1.50, and actually everybody will think, oh, that's great. And he's really, really worried about that, and you can buy it today at 34p. So what are we doing? It's like, it's there. It's staring us in the face.
And I genuinely think that people are starting to wake up, as I said to you, coming back to the point about these large companies, these mid-tier and even the majors not having an exploration department. This is just going to highlight it. And then once we see more of these acquisitions, all you need is extract resources to pull off a sale of that asset at Racecourse. And that'll be it. Everybody will be absolutely, they'll see it happen overnight. The share price will go off. People will be scrambling to get in. Oh my God, there's an offer of X, 50p, 100, whatever it is. And that'll be the start of people getting back into junior explorers.
Yeah, let's hope so. Let's really, really hope so, There was some news with Simi, and it's been going up and down like
yeah. I mean, I've been a bit off the ball with Simi because it's just hasn't really been on my radar. But I think there was some news this morning around the Trade Flow Capital Management's 4-year senior note, which was issued by its CEMP-USD Trade Flow Fund and arranged by Conduit Securities, part of the Conduit Group, has been made available on SMAT, the Swiss Wealth Management Investment Platform. So I think a lot of holders are saying that the trade flow is a big part of it, and obviously they've got a big investment in within trade flow. So yeah, that's all I really know about it. I'll drop the ball on that one a bit, I'm afraid, Kev.
Simi, in terms of where it was, I mean, we go back 2 years with Simi, and we were buying it at 0.05 pence. Of 1 penny, and all the way up probably to 0.2, and then it just went crazy. Yeah, it went up to 0.8 or 0.9 pence, and then came back down, and has just continued to go down. It went to 0.65, which was near where we bought it 2 years ago at 0.05. It wasn't far away, and then it really bounced and went back up to 0.12, I think. And I think it's sitting about 0.9, 0.1 at 0.09, 0.1 now.
Yeah.
If it works, if the system actually works and generates income, this is going to work, and it's going to produce a hell of a lot of money. That's the reality.
I think the problem is I think it is that complex a system, the way it works, you know what I mean? Like, as in, like, the rules and the regulations, the hurdles they have to jump through, the hoops they have to jump through to get this technology working, and through accountancy laws and you know what I mean? It must be very complex to come in, to have a technology like this, to get the regulation, to get the approval on it, that it's just taking longer than anticipated. And is that the reason for the sudden downturn? I mean, it was not long ago, it was around 3.35, 0.4, and all of a sudden you see, I think it dropped to 0.06. You can actually buy it at 0.059 or so, around the 0.06, let's say. That's cheap. That's almost down to the 0.049 levels that I was buying and you were buying at back in the day, yeah, when it was just massively sold off. I guess there was a catalyst.
But the market cap wasn't the same, because it has been diluted a lot. And I think one of the reasons that has taken it from the 0.2 or 0.3 range back to where it is now is a lot of these CLNs, which basically they've been having to take money out of it. So yeah, but SYME is going to, if it gets it right, it's going to produce a lot of money. And, this share price will be a thing of the past without doubt, in my view. And another share which has been absolutely battered, which I'll talk about now so Phil doesn't laugh at me, is chill.com. and it has a beautiful, beautiful chart. It looks like a mountain. Unfortunately, it's got both sides of the mountain in there, because it went from 3.5p all the way up to £1.08, and then marched all the way back down again now to 4p.
Just looking at it, it's perfect. It's almost like it literally is a perfect triangle, isn't it? It's like
Mont Blanc.
It's grand old Duke of York. He marched them up and he marched them down again, didn't he?
So the question you've got to ask yourself is chill.com, having risen, at its best today, or on Friday, should say 40%, is chill.com overdone? Is it worth more than £9 million for what it has? Even its actual enterprise value with no sales, it's got to be worth at least that, and possibly more. There has been talk that chill.com, the domain name, is worth quite a few £1 million or dollars. There's been figures mentioned of $20-30 million just for that, which basically means the domain name could possibly be worth more than the whole company right now. If there is any good news around this company, anything, communication wise, because we really haven't had any communication from them in 9 months of any positive nature. If there is, then there's a gap at 8p going up to 9 to 9.5p. I feel technically it's going to be filled. I've had this chat with Zach as well. That gap is very likely to be filled. So is it going to happen? Who knows? But I'm certainly hoping it does. And it's one of our stocks of 2022. And it's so far is our worst performer. And yes, I picked it. So it's pretty embarrassing. So get yourself sorted out, Chill.
Right. I'm going to come on to one this week, a new one, if I may. It's one that I've sort of been watching for the last, week or so, and it suddenly just looks like it's starting to turn a bit of the corner in terms of volume and the right.
Was that a pun?
Yeah, turn a corner. A cornerstone this is Cornerstone Investment. It's a nice little pun there. So Cornerstone,
even though you didn't know you were doing it.
Exactly. It's basically subliminal, is what it is. So basically, it's Cornerstone FS PLC. They're an AIM-listed vehicle. CSFS is the ticker, and they listed back in April of last year. Okay, they were admitted to the AIM market in April, and they raised circa 2.69 million at the time of placing. Placing price was done at 61 pence. So get that in your mind, 61 pence. Okay, that's what they raised at. Now, current share price as of today, or as of close on Friday, was 22 pence, but it started trading on Friday morning at 17.6 pence. So it's had a bit of an uptick on Friday. I think it did 20% on Friday. The point is, what is it, you may ask? It's an international payment system. They basically, it's similar in a way, isn't it, to GST in the technology, and it's a bit of an FX vehicle, but they're an international payment currency risk management electronic account service to SMEs, small to medium-sized enterprises, and also for high net worth individuals. And they have if you go on the website and have a look at it, you can actually sign up to one of their accounts, and it's fully FCA approved, by the way. That happened last year as well. So they've got the FCA approval, and you get an IBAN number in this account. And basically what you can do, as an example, you could be a Chinese national and you come to London to invest in some property, say, you can actually download the app, put your funds into the app as an asset under management, and then you can make payment to whether that be a home builder, whoever, or the homeowner, and it will do the transaction seamlessly, instantly, and also without a large FX type fee, right? That's what, because we had a chat with Julian, the CEO, right? That's the kind of gist of this technology, isn't it, Kevin?
Yeah, and hopefully we're going to be doing an interview, so you'll hear more about it next week. We're supposedly talking to them next week as well. So, but it's very, very interesting, and totally and utterly not without cost, but virtually no cost to develop a huge platform for this thing. So effectively, its ability to scale up is huge, and also, with very, very few costs once you have the initial technology in place. So yeah, its potential is pretty big, I have to say. And from our conversations, that I think they're pretty close to getting towards break even anyway.
Yeah, I mean, I think that they announced they had a trading update for financial year 21 to end of December, and I think that they had a 38% year-on-year growth. And I think you're right that they're not, the revenues are up, but they're EBITDA negative. You know, they're not actually making any profit at the moment, but they are really starting to drive that. So they've got established Forex services provider focused on, as I mentioned, these SMEs. They've got revenue growth ahead of the estimates. They've got a swing in favor of direct sales because there's a marked shift has been seen in the revenue mix towards those direct sales. There's acquisitions in prospect and believe that a compelling opportunity exists to acquire smaller services providers within the Forex market, which will obviously yield benefits in terms of customer footprint and growing transaction volumes through the core platform. And then I think that if you look at the notes, they've been given like fair value equity valuation ranging between 12.5 million to 24.6 million. And that in the latter scenario includes acquisitions planned for first quarter of 2022. There is a report that's been done recently by Hardman and Co., which I could probably put a link to or point people to if they're interested. But yeah, it's an exciting one. I like this fintech and Forex space after our conversation with GSD. And I think the market's starting to see a real value in it and actually appreciate this type of technology.
Yeah, the fintech is hot stuff, isn't it? It's like, if you can get a platform sorted out that is able to increase in that situation, and in this case, it's in the real world, if you like, in the fiat currency world, that we're still going to be using this stuff whether we like it or not. For all the people who want to shout out about crypto, the reality is we're still going to be using currencies whether we like it or not, whether the digital fiat currencies or fiat currencies in paper or whatever. We will be using them. I mean, it was quite shocking really when I came to London the last time. Normally I'm very conscious. I have to get some cash out. Because I have to have cash to pay for something.
You don't use it.
I never took any cash out, and I never used cash once the whole time I was there. Which is bizarre. Every single situation, card. I think
so moving towards a cashless society, and COVID has just kind of like forced the hand on that. It's just exacerbated it, and it says we don't handle cash. I mean, went to Centre Parks a few weeks ago, took a couple of £100 out, thinking that you need that for a weekend, right? Got it there. Sorry, we're completely cashless now. I'm like, oh, dude, you know what I mean? It's like, but you use your card, don't you? But they monitor every single transaction. Like my mate was like, he's a real old school, and all he ever does is use cash. He's Mr. Cash. He's always got wads of, he's like 50 notes in his wallet, and he's always like, I don't want them monitoring and knowing what I have and then targeting me with marketing and all this. You know what I mean? It's a danger having a direct debit account. And there was a really interesting video I watched, actually, going off on a tangent, but it was talking about credit cards. That there was this professor, financial professor, and he was saying, I do not have a debit card. I have an account, but I will not have a debit card because it's somebody's way of getting into my account and stealing. You know what I mean? It's like a key to my bank account, effectively. And you should be buying things on credit card. You should be using credit. Liability. If somebody steals my card, or I'm not insured. You look at the insurance you have. If you buy concert tickets or a holiday on a credit card, you have complete insurance. Should that company go bust, you can claim back from your credit. You're moving that kind of liability to the credit card provider itself. And his argument was, I'm teaching my kids to use credit. They're never going to have a debit card in life. You always use credit. And it's an interesting take on it. It's something I've never really looked at and thought. People are so hell-bent on, no, I can't take credit. It's the wrong thing. If you use credit cards wisely, they're a very, very powerful thing. And also the other argument was, you get your credit rating up by using credit cards. If you can get your credit rating up to about 800 points, when you're 18 or 19, and when you can get your first card, you can go off to get a mortgage, you can get any loan approved. And actually, there's a lot to be said for that. If you use debit cards, it doesn't help your credit rating.
Yeah, because you've used your own money, which is bizarre.
Yeah.
Absolutely bizarre. Anyway, you have gone off the beaten track. Let's talk about one more stock, and that was the first NHS contract for Genodrive or GDR.
Yeah, this is one of
80%.
Albert's, isn't it? Albert was giving it all this. He was pinged as, oh, GDR, loaded. I've got my target, and he's loving it.
80% up or something this afternoon after that RNS. Yeah, I mean, it's good to see these companies doing well without COVID, because this is nothing to do with COVID. This is like a practical application of what they're gonna be using. So yeah, well done anybody who's
it's great
either held Genodrive or actually, you know, I've bought in at these lowly levels and I've seen a big uptick, you know, because it should continue.
With the demise of ODX, with the Amiga Diagnostics, which absolutely, when you read that story, it is. I feel for any investor that was buying the dream at £1, or even, you know, wherever it was, and they go on that, you know, in fact, didn't the shareholders voted recently against the placing, didn't they? And they actually usurped the board on it. There was a massive. They put it to vote whether they would place at a massive discount, something like 5p. They were wanting to raise at 5 pence. Don't forget, not long ago, this share was 90 pence. And through what looks like a really badly run company in terms of board decisions and just terrible decision making, you know, contracts that were promised that didn't, you know, with NHS, and I feel for anybody they got. So it's really nice to see stuff like, I think Synergen SNG was another one that did quite well today, didn't it? Even though there was no significant news on the day. But yeah, the GDR RNS this morning with this new Manchester University Foundation Trust for this technology, this new antibiotic-induced hearing loss technology, looks like a really nice technology.
And the last one I'll just throw in this, possibly in the same light, is BIDS. I mean, Bidstack. I mean, I've owned Bidstack at 35p, I think it was, and it's now 3.5p, and it was a lot lower. But you know, they're talking about in-game advertising. There's a lot of gamers out there, and basically they're being subliminally, using that word again, subliminally approached with this advertising, and it works because in the game they see the advertising. Yes. So by all accounts, the recognition of those adverts and what have we is pretty high. And I can see this going forward, just building into a pretty significant revenue generating business.
Yeah,
but it's taken a long time. So
it takes a long time. I'd like to get Bidstack on a roast. Speak to James Draper, the CEO. I think it'd be really good to get their angle on it. And they just announced, I think it was last week, this partnership with Group M's Axis. So that'll be an interesting one, I think, as we see that grow. But yeah, certainly a company that's always been on my radar. But I'd like to speak more to the CEO and get a feel for the company.
Yeah, it would be good. It would be good to get them on. And overall, if we look at our top 12 stocks of 2022, we're up 32.5% overall. We had a good week this week. Obviously, quite a few of them are up. Well, eight of the 14 stocks now are up because we added 2. If you remember last week, we added Blenco Resources and Ocadian Energy. Ocadian Energy is ridiculously cheap. That's just gone crazy. I don't understand. It's below the placing price now. But we've got 8 up. We've got 3 that are marginal, which basically means they're within 5 or 6% of breaking even, which could just be the bid ask on some of these stocks. And with 3 way down. Okay. And shockingly, the 3 that are way down, I think are all.
You're going to say it?
No, but Chill's not a CBD stock, but they are.
Oh, come on! All right, but it's connected
to CBD.
In the CBD and wellness sector.
Yeah, connected to CBD. They're the 3 that are down. So the reality is, does this mean that business is dead? Like CBD is dead? It's never going to happen? Because I don't believe that for 1 second. I think it's something. I think it's just a reflection that the world's going to be used.
Just a reflection that's the current sentiment right now is not good. We're talking to somebody recently about listing a cannabis company, and basically the question was, is the time right now to do it? And probably not is the answer. You know, if you could wait a few months, you know, hopefully sentiment will come back and we'll see a shift in it. But until then, I mean, it's very telling actually that all 3 of them are that, you know, that's a good, at least there's a commonality there that you know, there's a reference between all 3. I mean, Seed's ridiculous. I mean, we need to get Ed back on at some point and talk to Ed, because that is a strong company with some strong investments in it. Well, on that note, it's blue skies out here. I'm going to go and probably head out to my mate's curry house, grab a pint, get a takeaway, and come back and enjoy it.
Enjoy. I wish I could do the same because it's pitch black here and we don't have any decent curry houses.
Well, have a good day and enjoy your roast as well.
Indeed. Thank you.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.